Tradespoon and Yellow Tunnel. My name is Harpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor, not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. And you can see the relationship between Yellow Tunnel, Tradespoon, and Vanguard on the bottom of your screen. All right, trading psychology is important. Again, we've seen, if you follow the pre-market futures, they're down significantly. Again, uncertainty about where the interest rates are going. Right, we talked about the 2-year jumped, flattening of the yield curve yesterday. Towards the end of the session, we saw some signs where magnificent 7 stocks were under pressure, and today it's translated into AI names that led the market, right? The memory and AI, with the fear that now that everything's financed through debt and equity, and the path of least resistance for the interest rates to start going higher potentially this year, despite lower oil prices. Market is taking a breather. So idea again, concentrating on things that are within your control, because it's going to be very hard to predict what the new Fed committee will, or the new Fed chair will do, right? It's all data driven. Data, it takes time to adjust to all the energy shocks, right? Whether they're temporary or not, it takes time to adjust. So I think it's going to take time, again, to get these data points about the inflation and if the interest rates are going to go higher or lower. Meanwhile, market does not like uncertainty, right? So I would continue to concentrate on things that are within your control. What's within your control? I would raise my cash level, right? I said that, probably 40% of my portfolio right now is in cash. So 40% of your portfolio is in cash. I would have higher cash position than if you were, in May or June. So higher cash position, and look at the portfolio drawdown. Look at the portfolio drawdown. I propose when you start, have only 4 positions. We talk about kind of a barbell shape approach for investing, right? Where majority of your money are sitting in the cash and something that you're holding, and then you do have 10-20% of your portfolio to more speculative names. So when it comes to speculative names, option, right? I consider options speculative, aggressive trading, right? When you buy calls spreads or sell put spreads, you're trying to determine not only direction but also timing. So for that reason, especially if you're new to trading, I would start with 4 positions, 2.5% account value per position at risk, 10%. The rest of, you have 30-40% in cash. So 50-60% already allocated. And then the rest of the 40-50% you can keep in value stocks. Value stocks have been outperforming the market, small caps. If you're more aggressive, on the pullback, you can buy technology like QQQ. Or EEM. So that's important. I would keep a trading plan where you would write down these rules in terms of your portfolio allocation, risk tolerance level, and then keep a journal in terms of making sure that you're not breaking any of your rules in trading plan. You want to be diversified, right? If all 4 names are in AI stocks, then they're highly correlated to each other. Then during the market pullback, you're down, across the board. I mean, on all of your positions. So you want to minimize that. You want to be diversified. We've seen bank stocks are doing better. Industrial stocks are doing better. So one position could be industrial. One position could be bank. One could be AI name, right? Micron, Dell, LRCX. But be diverse. Try to be diversified, and in your trading journal, write down every time you trade. Write down the trade. Why did you get into a trade? Target gain, stop losses, and then grade yourself. A and B. If you never were down more than 2.5% of your account value per position, then you'll give yourself A and B. And then if you were down more, then you'd give yourself C and D. Wait for 2 to 3 days to confirm trend confirmation, right? We were down yesterday towards the end of the session. Pre-market futures are down. If tomorrow we're still down, then probably this rebound is, coming to an end, right? And we're again setting the top, right? The idea is it's hard to call the top, but if 2 to 3 days you have sharp reversals, and then I would say probably the top is set, at least for a short-term period of time. Allow more time, right? Right now, I would think of June. We had June expiration, right? Usually after expiration, you have volatility that next week after June options expire. Plus, you have quarterly, right? Russell 2000 rebalancing. You have a quarterly, first half of the year rebalancing, which also causes this sharp swings in the money flow from one asset class to another, right? From AI to small caps, from small caps to value stocks, and you have large changes in allocation. Wait for volume, VIX reaching extreme levels, right? Wait till end of day to rebalance your portfolio. Do not sell naked options, especially if you start trading. If you want to trade options, use spreads or single options. And then keep an eye on how often you look at your portfolio and why you're trading. Keep in journal. Are you trading because you're angry, revenge trading? Are you chasing the market? All right, so let's take a look. If I look at the stock forecast toolbox, actually was doing a good job, for the past few sessions, right? Telling us that market is neutral, not a lot of momentum. Beyond 750, 760 level. And on the downside, potentially reaching 740. Yesterday was 735 level. I agree with the model, right? I would give it an A. The way for the 10-day prediction, same thing with a 6 months prediction, right? I would give maybe A plus for the model. Basically on the 1st of June, right? This is a monthly. On June 1st, basically saying that we're not going to break, 760 is oversold level, right? I mean, it could be higher than 760, but it's oversold. Consider trimming your positions. We never reach 673 or 700 level on S&P. We may not reach that in the next week. We'll see how sharp this pullback is. But spiders are trading at 733, basically retesting 50-day moving average again. Right, we retested it last 2 weeks. We're retesting it again. Right, so it's important to see if the 730 to 720 level holds. If it doesn't, we have further pullback, right, and more room to the downside. The main culprit is again our interest rates. Even though today interest rates are down, no new signal, but we do see flattening of the yield curve, where 2-year, 5-year, 10-year trading almost at the same level, right? So yield curve flattening, that's usually associated with either fear of recession, the rise of interest rates, and the fact that dollar continues to rally is also bearish. So keep cash, look at the number of positions, draw down. If you're down more than 2.5% on option position, I would exit. On session, I would look at your cash. If you have 30-40% of your cash, I still think we're trading in the bull market. I think this is more of a expiration, end of the quarter rebalancing, fear of rise of interest rates, but mostly it's driven by uncertainty. Not, oil prices are actually going in the right direction, even though they're oversold, obviously, but there's given some breathing room for fear. Inflation and inflation expectations have dropped significantly in the past few weeks, right? So that would be the good news. But Japan is down 6%, and then NVDA is down 3%. Bitcoin is down almost 4% pre-market, and main culprits are semiconductors. Emerging 6%, right? It started again with news from South Korea, right? Some of the South Korean stocks are down 10-14%. The emerging market has heavy concentration in Samsung and some of the AI names in Asia, and semiconductors, SMH. And SMH down again. These sharp pullbacks, we've had it back in June, beginning of June, and now similar price action. I mean, never retested 50-day moving average, approaching 20-day moving average. So I would keep an eye on semiconductors. QQQ is down 3%, basically closed the gap. I mean, on its way to retest again 50-day moving average. So there's a lot of position at 700, right? We looked at the QQQ. So June has expired. July and September already kind of building positions. But large concentration of puts are still at the 700 level, right? Which is, you have July position, you have, well, this is this Friday, and then September 18. So QQQ, I would watch 700 level, right, on QQQ. And on spiders, SPX, so happy Tuesday. Sorry about yesterday. Gamma flip point is still 74.50, right? We're trading below that level pre-market, or market just open. I mean, I would watch, where are we on SPX, right below 7,400. See, so we're at 73.50, right at the 50-day moving average on SPX. So I would watch, well, at this point, we'll see where we close. Let's assume we close here or 7,300. That's your next support level. So I would watch, let's see, 7,300 you have position. I mean, 7,200. I mean, a lot of position at 7,000, right? 7,000 on SPX, which would be 200-day moving average. But first thing first, you have, I would say this is your number one support, right? This is last week low, last 2 weeks low, 50-day moving average. So 7,300, 7,280. If we break through this level, first of all, I think the top is set. Short term, the top is set, right? You have 1, 2, 3, right? So I think I would assume that at 7,600 I would raise cash, and for now we're trading in this range. I mean, maybe 7,280, 7,200, right? The second support. If you're day trading, I would use support number one. I would use right at support 7,200. So we're trading in this range, right? Where this is, I would sell. For now, I would buy here, right? Unless you start seeing interest rates just taking off. For now, no new signal. No new signal in interest rates. I do, dollar is an issue. So dollar continues going higher. That means that it's not fear of inflation like we had before, right? This is a fear that the Fed is going to raise interest rates and impact, uh, real interest rates, right? Real interest rates, and you know, Microns of the world and Googles of the world are going to have hard time refinancing all their debt they accumulated with the lots of red on my screen. Lots of red on my screen as well. Okay, what are the good news? 10-year yield is stable, not going too far. 2-year yield actually pulled back. Let's see, go back 1-day chart. So 2-year yield is down 10 more than 10-year yield, so that's positive news. Dollar is higher, that's negative news. High yield is stable. So the treasury versus junk bonds versus triple B. I mean, it doesn't look like a great chart, but well, right, they're not dropping precipitously. It could be argued that this is balancing for now, at least. Equal weight S&P, right, down 0.5%, still in strong uptrend. Value stocks still in uptrend, right? So making new highs. Small caps outperforming QQQ and semiconductors, which is also still in strong uptrend. There's testing 20-day moving average, QQQ approaching 50-day moving average. Regional banks are stable. That's positive, right? That's, not a sign. Silver, again, stronger dollar impacting silver. Consumer staples catching a bit. People are going to safety asset classes. Metals and miners sharply down. XL down. Copper FCX is down. China is down. Emerging market has high concentration of AI names. Memory stocks, that's down 5%. I would keep an eye on the software names, right? IGV, because in theory they should lead the market to the downside, and IGV is actually up, right? Microsoft, I think, was up pre-market. So that could be a sign that this is just, again, I mean, you can argue, you can make a bullish case, you can make a bearish case. This would be an argument that this is a rotation, people, booking profits for first half of the year, money managers, and diversifying, away. AI names, right? Not because a lot of fund managers, had very high concentration in the AI names. All right. Any questions so far? All right. What else is interesting? Silver, gold. Let's look at the watch list. Retail stocks are actually flat, so that's also good. So metals and miners are down, stronger dollar, that makes sense. Consumer discretionary is down. XLK is down. Industrials sharp 2.5%. Banks are actually stable, so that's good. Home builders are down. Value stocks down 1%. VIX above 20. I saw sharp move in VIX. Spiders down 1.5%, staying at the 50-day moving average. Conductors down 6%. Meta is up. Amazon is up. Micron, right? So that means these stocks are at least, software names are oversold, right? And maybe Amazon is now at oversold levels with Google. Or rotation, right? You sell your Micron and you buy Google because Google is oversold and still it has a very strong cash flow that should support the debt that they've raised. All right. Citigroup is down 1%. Kroger is up 1%. All right, let's see. Give me 1 second to look at my positions. All right, so let's review the positions. See if you want to make any adjustments. So let's look at the lead circle. Okay, so yesterday I did get filled in Citigroup, 140, 145 spread that expires on July 2nd, and 137, 142 call that expires this Friday. All right, so that's the trade from yesterday. Citigroup is doing better than the rest of the market. In line with SPX, down 1%. Still above 50-day moving average, so at 143.96. Still in the money spread. Let's keep going. Amazon, I personally think down 2.5%, I would get out of the trade. If you're down less than 2%, it is oversold, right? 2 standard deviation, it's down 16%. On Amazon, we are approaching earnings. At some point, the focus will shift into earnings, right? Maybe after, end of the quarter, after 4th of July, people are going to start thinking about earnings, not interest rates. So, Amazon is up on a down day. That means probably not a lot of sellers left, at least for now. So that's Amazon for now. It's a stock. As long as I'm right on direction and I'm not down 2.5%, I'm just going to hold it. I think I did trim half of my position on a rebound, so that's good. QQQ, next one is QQQ. I did trim on the up. I bought it on the way down. For now, I'm watching. 100 is a good support level. I'm going to assume it's going to hold until it's not. So until I see that, we take out the June lows, maybe at 700, I would probably add into QQQ position. Right. If you have a lot of cash, you might want to think about start raising, slowly at now. But I think I closed it right at this level, so I'm going to wait and see if there's a follow through this week, which probably could happen. If you want to hedge your position, I would consider repeating this trade again. It didn't really work out last time. It was up double. I thought we're going to have deeper pullback, but you can do the same trade in July, right? Where you buy 700, sell 690 or 680 put that going into July. If you think pullback is going to accelerate, right, and get to the 700 level, maybe not the worst idea. Let's look at the quotes. Maybe this is something I should do too, just to see. Let's see how expensive it is first. Well, 200 level. So QQQ. Trade from yesterday. Listen, this was a great Naji. This was a great. I mean, we were talking about hedging yesterday, right? Naji asked, how do you hell, but yeah, this is a, if you were buying puts spread yesterday, then yes, this is was a hedge. So we're talking about either SMH or QQQ. You can go, I would go into July now, right? July expiration. If you're concerned that 700 level does not hold, right, then same thing, you can buy 700 and sell, let's see, 690. How much is 700, 690 put spread right now? $2.57. Yeah, so you can buy spread for 265, and maybe if it reaches to 690 or breaks below that, it will be potentially $10 spread at the expiration. If you want to be more, if you think sell-off is going to be aggressive, you can go 700, 680. Then it's $4.79. But so I'm probably going to do that. So let me see. Most accounts are smaller. So if you have a smaller account and you want to be under, not risk more than 2.5% of your portfolio, then I would do 700, 690. So trade options, let's see, QQQ, vertical. We'll do $10 spread. Gonna go into July again and kind of do the same trade that I did for June. So $2.70, $2.70. See, did I get filled? Yes, I got filled. $2.70. 267, you probably can get filled. But basically, repeating the same trade in July. And last time I was actually up 100% of this trade. Maybe this time, not wait for further pullback, but if the spread does, trade at $5, $6, maybe time to exit. Let me just exit actually. Put that order in. Sell to close. So I'll do it at 490. And see if I can close it at 490. The maximum loss is $2.70. If it drops again 50%, I would consider exiting. The rally was, when they signed memorandum of understanding, just, you don't always able to exit at 50% loss. But that's the target, 50% loss, and then potentially make $2 in this trade. So that would be one way to hedge your portfolio. And if you have four currencies spread, I mentioned, do I start closing? I would, yeah. If you have 4 contracts, I mean, 20-day moving average has been a good support. We had a sharp pullback in May. We had a sharp pullback in June. Day moving average held. So I would close, I don't know, half of your position, 30% of your position. You close half here and then you close half at 50-day moving average, 550. I think we looked at SMH yesterday. I mean, that's what I would do. I mean, without looking at everything else, it's hard to make a determination. But usually my exit strategy, yeah, I would close half. Now, a lot of positioning at 600, right? We talked about yesterday that 45,000 contracts at 600. Pretty heavy concentration July 17th. So as of right now, I mean, obviously it was rebalancing, you never know, but 600, I would, is somewhere between 575 and 600. There's a lot of support, right? If I go back here, I'm going to say that this is a very strong support, right? Somewhere in this area. So I would close half here and half at 575 or 590, something in that region, because I think this level will hold by July expiration, and then you have earnings. Keep in mind, we do have, I mean, I think the next level in the market is going to be heavily dependent on Micron, right? Because Micron announcing earnings, not mistaken, actually, either tomorrow or after the close today. Tomorrow. So Micron announcing earnings tomorrow is, going to be very carefully scrutinized, right? I think they have support at 1,000, right? There's a lot of support at 1,000 for Micron. So I would watch 1,000 level on Micron tomorrow. I mean, tomorrow, but day after tomorrow, after the announcement, right? And see, are we trading below 1,000? Trading, you know, at 1,400, right? So very important earnings, right? If they say something along the line that revenue is start decelerating, revenue growth is starting decelerating, or not give very strong projections, obviously it quadrupled, right? Or 3 times, right? It's 300% growth since March. I mean, you could have sharp pullback to 900 or even 800 level. Micron earnings are going to be important kind of forward-looking guidance in terms of where we're moving next. Personally, I would do 50%. Personally, usually when I close, I do either 50% or 30%. I mean, right. Like I said, tomorrow this whole trade could be reversed, or we could continue. But we are approaching levels where there is, right, like 600 level on SMH and 100 level on QQQ. So you're already halfway there. That's what I would do. And just keep in mind, there is no rule, right? A lot of the decision whether you close 50% or 30% depends on your cash, right? From my perspective, you have 40% of your portfolio in cash, like I do, right? I would definitely close half, because my thought process, I can close half here, I can close half at 700, and if it drops 660 or 680, I have 40% in cash. I'm going to start buying cash, and S&P, drop, I don't know, 10%, let's say, right? So then it makes sense to me. If you don't have any cash right now, or you have very little cash position and you have high concentration in QQQ or AI names, then I would not close any of my SMH because I don't have enough cash. So the way I usually look at it, let's say SMH is down 5%. If your overall portfolio is down 5% or 10%, I would not close any SMH contract, and I would actually close my SMH stock position, right, or option position, and start raising cash, because SMH down 5%, SMH could be down 20%, it could be down 30%. So you don't want your portfolio to be down 20, 40%, right? So that would be my first input into my decision. My portfolio is down less than right now, maybe 0.5%, right? Because I have large cash position. So for that reason, I have time, right? So that would be my thought process. In general, if you're down right now more than 5% or more, that means you have too much exposure to AI stocks or options. This is the time to use this opportunity to trim. DRAM. I do have DRAM position. Let's finish. I mean, you can buy DRAM, you can buy QQQ, SMH. This is all the same trades. I usually like to be patient, right? We haven't reached 50-day moving average. We closed this gap. We're trading below the support line. I probably not gonna buy until we get 700. My first buy would be around 700. For now, I put QQQ put spread, so I'm hedged. If we get to 700, I still have, 50, 60% of my portfolio in equities. So I do want it to get back to 740. My thoughts, we're in the middle of this range, right? So it's a flip of a coin based on Micron earnings tomorrow. And we do have Fed speakers, right? We're going to talk about interest rates this week. I'm sure that will create another level of volatility. So I would be a seller here. I think the top is set, at least short term, right? Until earnings season, people are going to start paying attention to earnings. Top is set. You have a strong support since beginning of May. So you sell here and you buy here. Right now we're at 50-50 flip point. That's why I told that if I had SMH put, I would maybe close half. Because if we get to 740 back, then I would buy back those two puts that I close on SMH. But if we drop to 700, then I would close the entire SMH position. But it's a 50-50 chance. We could be at 740, right, after Micron earnings, or we could be at 700. Right? I don't have a strong view on Micron earnings. Right? We've seen some of the stocks like Dell or Intel, they just continue to grind higher. It's a little bit different market conditions, so I'm not sure. But based on position, you have 2,000 contracts at 1,400, 1,200. You have call volume 32,000, 31,000 contracts, right? So there's a lot of people think we're going to be up, at least 10, 15% on Micron earnings. Right? So you have 1,100 position, you have 1,200 position, 1,300 large positions. And here you also have a lot of put buying, right? So that should give you some support. If it's kind of a decent earnings, you might not get a lot of move, below 900 or 1,000 level. $700, $690 debit puts preferred makes sense. DRAM, so yeah. But again, and a lot of it depends cash. If you have, 50 or 80% of your position in cash, then yeah, maybe buying DRAM, adding to a DRAM position makes sense at that 70 level. Right? We did say that DRAM has a lot of support, right, here. I mean, I bought it at that level, so it doesn't make sense for me to buy it again at the same level. I would probably think if it hits 60, I would buy it. Right? But we did say that actually 70 is gone put, so 60. So you have a lot of put spread at 60. Right? That's the put wall. Yeah, so the put wall is at 60, flip point 65. We're at 70. Doesn't look like there's a lot of gamma at 70, unless this is wrong. Let's take a look. DRAM. Let's go into July, where the most of the contracts are trading. So 70, you have open interest of 28. So yeah, 65, you have 15,000, and then 60, you have 10,000. Right? So 70, it's a flip of a coin whether the 70 it will hold. But if 70 breaks, we're going to be quickly jumping to 65 or 60 level. So 65, 60, this is where I would start thinking about buying DRAM again. For now, my spread is kind of not going anywhere on DRAM. That's the only option position I have, right? Let's look at all my positions. Oh, in Citigroup. So I have Citigroup that expires in June and July 2nd. I have DRAM that went into July. So for now, I would just wait. I have plenty of time. We're still in June. Not too much time, but so I would, for now, I'll just wait. Right, let's review the rest. So we talked about Amazon, we talked about QQQ's position, right? 700 is where I would, that's kind of my entry point before. I would enter it again. Emerging market 67, I would entry point 64. I would, maybe buy back those shares that I sold at 64. Microsoft, I was planning same thing. If you're down 2.5%, I would exit. If you're not, it's up 2% on a down day, maybe there are no more sellers left, right? So the chart. So Microsoft, for now, half of the position I'm holding, but I am close to 2.5% loss. Small caps, still an uptrend, right? That's the bullish argument. The tape has been broadening, right? The participation has broadening, right? And small caps are actually down less than 1%. And they did break above 290 level. So that's a bullish argument that this is just a sector rotation, fear of rates going higher, but it's all overblown and too early to call a internet bubble. So that would be the bullish argument, right? That participation is broadening, right? And small caps are not leading the downside like it did, in May of 26 or 25, April 25, where small caps were leading the market to the downside. So still holding small caps. We talked about DRAM. For now, I'm not doing anything. Let's see, what is it trading at? DRAM is trading at, and basically breaking even, right? So still waiting. CAR, let's see how the industrials are pulling back sharply. Let's see if down 1%. So I give model, let's see, is it better than XLI? A little bit better. 40 basis points better. Okay, so I give a model an A. So we did XLI drop to 177. That's the breakout level. 20-day moving average is not that far. So for now it held. We'll see if it's going to continue holding. So we talked about DRAM and Citigroup. How Citigroup, I think it was in line with the spider's pull. Citigroup is 1%. SPX actually a little bit more. SPX is off the session low, kind of touched the 50-day moving average and bouncing back. Any questions so far? Discord, guys. Happy Tuesday. Good morning. All right, Harit Muffin and Mark Russer. Thank you for participation. Let's see what else. All right. Any questions so far? All right, let's look at all right, let's look at other positions. So AMD, let's see how the semiconductors are doing. Down 5%. Right, so Amazon is at 235. DRAM, Google. So Google is bouncing off of 100-day moving average. Amazon is bouncing off 200-day moving average. And then is bouncing off of 90. So between 90 and the 100-day moving average, 86. All right, any other questions? Spiders looks up. Well, the model predicted for today 739 by 751. We are at 736. So what used to be a support, right, because it's a sharper than model expect pullback. I mean, 740 is now your overhead. Let's see. $740, right? So you have a gap. We closed the gap. We broke below that. So 740. If we, as long as we're staying below 740, bulls are in control. I mean, sorry, bears are in control short term. If we can get above 750 and above 20-day moving average, then yes. So that's kind of the question: is this a confirmed breakdown below 740 level, or this is just a temporary, and we're gonna have a reversal tomorrow? I mean, too early to tell, right? I would say we have to wait till Micron earnings and all the Fed speakers this week. So I assume this volatility is going to last. So for now, you have 17. I would trim your positions at 760. Consider adding either at 50-day moving average or in those last week lows. Fred, actually, I am on the 28th floor, shelter in place. I'm hoping this is just what is it called, a drill, and not actual. Well, everybody's here actually. Nobody's going lower, so we'll see. Sorry about that. So hopefully this is, hopefully it's just a drill. I really don't want to walk on the stairs for 28 flights. All right. Anything else? Hide under my desk. Hopefully I don't have to hide under my desk. I mean, periodically they do these drills in the high rises here in Chicago, but we'll see. Okay, but at least I think this is all I have for today. I'm gonna figure out if I should go shelter in place. If everything is good, then I will see you guys tomorrow after the close. Keith will do the closing bell today and morning bell tomorrow morning. And that's all I have for today. Obviously, keep an eye on 10-year yield, a 2-year yield. 10 years, 2 years down, that's bullish. News grinding higher, that's bearish. VIX briefly touched 20. Below, as long as it stays below 20, that would be bullish. Equal weighted is flat, so I would say again, a lot of rotation, a lot of reaction to the Fed speakers, and I would just for now observe the market. All right, that's all I have for today. Thank you very much, guys, and have a great day. It's definitely better than climbing the stairs. I definitely don't want to climb 28 floors. All right, thank you very much, and have a great day.